Well, hello and welcome and welcome and hello and welcome and thank you for tuning in to another special edition of Un Poco Mas. My name is Danny Deals. On behalf of Not a Lurker, Stock Heron, Hurricane Lopez, and all the rest of you turds, we would like to say welcome and hello, guys. Obviously, if you just crawled out from under your rock, you can see so went down about 10%. The ER was really a mixed bag. There were some things that were pretty good, some things that weren't so good. The real challenges, as I see, and I'll just go ahead and start out with the negatives are, it's pretty much right in your face. Tech revenues are just flat. Tech revenues have not been growing, you know, for some time. I mean, basically a couple years they've been in that transition, and they, keep trying to sell that, but I think people eventually, grow weary of the, sort of the story that we're in a tech transition, these proof of concepts. I personally believe that story, and I think Galileo is still worth the money that was paid for it. I think it's providing internal savings, but we need to see proof. The market wants to see proof. The other place I'm just seeing weakness is basically the entire business model is on cross-selling. Now, if you have adverse macro conditions, you have high interest rates, that's going to make that business model, very difficult to prove out. But it is what it is. Like these numbers are just not where SoFi needs them to be. And in defense of SoFi, you have to look at the fact they're guiding for 15 to 17%, I believe, growth this year. I mean, other companies that have ups and downs, like, Robinhood, their revenues, decline massively during certain years. I mean, you can see that here. They're up a billion, 1.8, back 1.3, 1.6. I mean, that just hasn't really affected SoFi in the same manner. SoFi has had very orderly growth, 5, 1, 1.5, 2. Now they're guiding for around 2.4. Personally, I think they're going to do better than that. And, analysts are saying, well, they're going to have a really hard time, coming through in Q3 and Q4 because those numbers are going to be, need to be quite large to reach their projections. I think it's just completely overly conservative. Things didn't fall off as hard as people would have imagined. And one of the things I was talking about in the comments, last week before I was able to hit the islands for a while, some much needed R&R, people are talking about, the net interest income is going to basically fall off a cliff, which I don't think it really will. They're tightening lending standards. And what I told, what I was saying to Tanner was not, you're an amateur at all. I love Tanner. What I was saying is the guys at Bank of America, they run that bank like shit. And if you read their last ER, their net interest income and the net interest margin was still really, really good. And it actually surprised their CEO how good it was. And I thought that was going to follow through with SoFi. And I think it did. I think the numbers were a lot better than people thought. Looked at 2 cents. Like I said, my sort of bullish, myopic number was 3 cents, but they came through with 2 cents, much higher, top line revenue than people expected. So this is the huge knock, and this is why they say, this is the reason for the sell-off. The 10% sell-off was that, management's guidance for Q2 revenue is weak at 560 or whatever it is, but look at their guidance for this quarter. They beat that. Look at their, they said this quarter they're going to make, 5 to 10 million, and they had made 80 million. So management's guidance is just kind of starting to piss me off because they're not real numbers. I mean, I think they're plotting for a worst case scenario that they know isn't very likely, or if you look at it statistically over standards of deviation or whatever, Noto's plotting for like that worst case 3% scenario that just we haven't seen play out thus far. It doesn't mean it's not going to play out, but I don't think guidance, at your high side should sort of be a worst case scenario. But in any case, guys, it is what it is. Volume was crazy, 150 million shares. That's why I say this was preordained. This ER, this guidance, everyone, all the analysts, all the media knows how SoFi guides. They know Papanoto doesn't give you a real number. So this is a solid BER. There's no reason for it to sell off. But again, what I would contend to you is the stock didn't really sell off today. Look at the chart, guys. I mean, so you have this line, that sorry, I hate these stupid Yahoo charts. You have this line that was resistance, flipped to support, and then you found support here at $7. It did not break down today, even under heavy assault. The shorts were really going after the stock. It hasn't broken down. It's gapped down like this a number of times. You see it here, here, here. Huge gaps down. I don't really assign that much meaning to it. I think this exact algorithmic short attack was going to happen, whether it was 3 cents profit, 1 cent profit, 2-cent profit, whether revenue beat by 30 million or missed by 10 million, whatever it was, the same exact thing was going to happen. The stock was going to sell off. Does that mean, the stock is doomed for another quarter? Absolutely not, because we're seeing completely different behavior out of market makers. We're starting to see big orders. Even in fact today, if you look at the daily, there's an awful lot of green candles. People are like, well, how do you drop it from 780 to, $7? The same people who took it to 780 took it to $7. The same market makers who pumped the stock pushed the stock down. Noto and team, Noto and company, the real insiders, the real smart money, they're playing the long game, 2026, 2027. They don't care about us. They don't care about us. They don't care about retail. They don't care about our feelings. They wish we were all dead and gone. They wish they drove us out into a cold prairie. Like a bad movie with Robert Duvall and Kevin Costner. I'll drive you out into the prairie. Why does an Irish guy, an Irish alcoholic, run this whole valley? It doesn't make sense. The potato famine hadn't even happened yet. Anyway, guys, welcome and hello and welcome. I would like to thank Not a Lurker, a.k.a. J Money, for hanging with me. I know I haven't been with you guys in quite a while. I get extremely busy with work in April to the point where I'm working 80 hours, 100-hour weeks for the big dog, just trying to keep the books in order and trying to keep everything on track. So, my responsibilities, real life, come first, but it's good to be back with you guys once again. Welcome and hello and welcome. It is un poco mas. Guys, I am feeling absolutely strong. Don't read too much into price action. I was watching, on the airplane, I was watching some Warren Buffett videos, as I'm wont to do. I like Charlie Munger even better, but he's talking about how only fools watch short-term price action, and I will extend that to only fools. And I'm sorry, I've been this fool quite often, but only fools buy these short-term calls. Let's see what's going on, guys. Welcome and hello and welcome and hello. I got J Money. Looks like he just did 7,350 kilometers on his road bike. Then he had time to shave his head with a straight razor, go ahead and get a hot towel on for the show, and he's joined us. He's graced us with his presence. Would like to thank Not a Lurker, of course. Who else should I thank? Let's go ahead and thank Alberto Birdie Avilés, our newest moderator. Certainly one of our top options guys here. Always dropping knowledge, always takes his time to comment. So J Money, my number one OG moderator, was kind enough to give Alberto his nephew, his son, his protege. Anyway, he has a wrench. Congratulations, Alberto. You win absolutely nothing. You win the booby prize. It's un poco mas. So what do you guys think about this ER? What's the good word, guys? The chart is not bearish, guys. This $7 level is absolutely holding. They beat the living hell out of the stock today. I mean, after hours, I don't know what happened, but guys, I haven't. If you couldn't tell, I haven't slept in about 48 hours, guys. I was on a red-eye flight. It's just been, you know how it is when you're traveling. I just, I can't sleep on planes. I watch Warren Buffett videos, but in any case, guys, if I'm even less coherent than usual, my humble and heartfelt apologies to all of you turds and butt plugs out there in the interwebs, but welcome and hello and welcome. So guys, short interest, very, very significant, running almost 19% utilization, 70%, short score at 71. They were borrowing around 12 million shares all day, returned a few after hours. Cost to borrow remained disgustingly low despite just around 1 million shares being available, but there are just so many shares of the SoFi stock, and there are not enough institutions locking those shares down. That's the bottom line. And you retarders are, knee-jerk, reactionary, weak-kneed, lily-livered turds. So you're always panic selling and dumping your shares. I'm sure, some of you guys got stopped out in the low sevens. I can't help you guys. You guys are buying these calls. I mean, what's the credit savage of Wall Street can tell you? He's making money from you idiots. To feed his illustrious content, which I actually do like. Go ahead and like and sub Credit Savage of Wall Street. Don't like and sub my channel. Like and sub my boy Jimmy Snuka. Credit Savage of Wall Street. But anyway, guys, welcome and hello. I could do shout outs to like other YouTubers. I like Brooklyn Stock Shop. He's one of the new he's one of the SoFi guys. He really is a hardcore SoFi bull. He's like, if you sold Nvidia when I told you at the top of the market, you don't have to thank me. He's just like, it's like he's just calling people out. It's great. I mean, I love you turders. We are just such a bunch of, degenerate characters. Like, if you sold Tesla at the top, you don't gotta thank me. Like, okay. I mean, I did, and I will thank you. And I did make some money shorting Nvidia at the top, and I sold Tesla. You guys have to use common sense. When things go crazy, when things are overheated, you have to get in and out. Like, I also love Felix. Felix, take my course. It's jolly good. There's just so many good. You got Jimmy Chitwood. He's talking about the S1s, the stochastics. Take that as you see it. My voice is very calming. It's like ASMR of stock investors, like Midwest. Anyway, guys, welcome and hello. You can see the max pain again is $7.50, and if you look at the volume, guys, just an absolutely ridiculous, obscene amount of volume on $8 and $7.50 calls, guys. You have I don't even want to say it. You have 71,000 contracts. Guys, this isn't open interest. This is volume. And then at 750, you have 66,000 contracts. Even down at 7, you have 34,000. And you see the puts at 7, guys. I mean, the market makers own your soul. The market makers absolutely. Think about how much premium was collected by people with a brain in their head. I say, don't do this around earnings, guys. They can do whatever they want, but this could be a classic dump and pump. This could be an absolute classic dump and pump. I mean, the fundamentals are so good for this company. Market makers like to pretend, hey, we don't know that businesses, certain sectors are cyclical. We don't know what a growth stock is. I mean, SoFi is just completely, dead in the water. Not the case at all, guys. SoFi is being very heavily shorted into strong bullish fundamentals. that's still the bottom line with this ER. And I mean, if you look at, even our old buddy, the Chia Pet, David Chiavarini, actually, he reiterated his sell, but he raised his price target from 3 to 4. He basically follows like the tangible book value of the stock and makes that his price target. I think, so it is what it is. It's ridiculous with the stock, growing like this. But other analysts, as they digest this ER, you'll probably see them, weigh in with their 2 cents. But let's take a look at just any institutional ownership updates we see. And there we have it, guys. Really big, uptick in the last official institutional ownership report. So it was, I can't get this exactly, guys, but it was like, I think these come out bi-monthly, but it was like 380 million, and now it's up to, I would say, just eyeballing that, it's like 420 million shares. So in that one period, that's, as you can see, that's the largest increase we've seen, in the last 8 months or so. So very good sign for SoFi that institutions are coming into the stock. Of course, you see Vanguard, and then, you see a lot of filings, tons of filings coming in on 429, Ben F. Edwards and company. I'm not going to go through all these, but a lot of these are increases. Finex decreased by 11%. Capital Advisors, big increase. But, a lot of these filings are, basically all institutions, mostly increases, a few decreases here and there. But the point is, basically what you want to look at is the overall, and the put call volume is even again, so that's bullish historically. But this huge uptick on that last chain they measured, or on that last measurement, is very, very positive. So even officially, even with all the recent dilution, you're seeing about 40% institutional ownership, or 415 million shares long. You have institutional owners out of 802. You have 746 long only, 27 short only, 29 short long. So you can take a look at funds that are actually shorting SoFi. Of course, there are. The good news is, guys, there haven't been many shorts coming in of late. Obviously, you can see institutions kind of flipping to long, slowly but surely. But I don't think there's really any sense of urgency because these ERs are so predictable. Management is so predictable. That's why I need Noto to throw in a crazy Ivan. Sort of shake the shorts off of this stock. But a couple other things. Let me go to my napkin math here. Like I said, the challenges are essentially twofold, guys. And let's go to the ER. Would like to say welcome and hello. It is Un Poco Moss. Hello and welcome and welcome and hello. If I look like I've got a little bit too much sun and I sound incoherent, both are the case. As I said, I haven't slept in about 48 hours now, but I'm doing the best that I can to touch base with you turds and reassure you that not all is lost. Mike Hill was here. He's very upset that I was late. I wasn't late because I didn't schedule this. I just did it randomly. So once you put the live stream on with StreamYard, it takes a minute to set things up, Mike Hill. So I don't know. Like and sub this vacant parking lot. Oh, man. You guys are so fickle. The mob is fickle, as they say. Nah, Sebastian, the ship is absolutely fine. I mean, look at the ER. Everything... there are beats across the board, and the raise was bullshit, but it's always bullshit. Hello and welcome, Colombian Kingpin 347. Hello and welcome. Lurker is never late. The party starts when Lurker gets here. So by definition, not a Lurker is never late. He's always on time. What's going on, Mike Hill? Thanks for joining me. Sorry you had to wait there, buddy. But what's going on, Charted Travel? Hello and welcome. What's up, Oprah's caramel cookie? Hockey rink. Look at the rosy tan. Yeah, had to get out of here for a little while. Hockey rink. Recharge the batteries after tax time. I was not born to do accounting and investments. It does not, it does just numbers, spreadsheets, all that stuff. It's not my preferred way to spend a month of my time locked in me office. But that's life, guys. it's not all lollipops and rainbows. Through making bank tech margins. Yeah, yeah. Charted travel. I get what you're saying. Remember, lending is a business that has made money since the dawn of time. The fact that interest rates have been high for a while and things have been difficult and student loans were paused. Don't let that, creep into your mind as the long-term trajectory of SoFi in terms of their lending business. They just have to keep hedging risk. But the fact that their bank deposits are growing so quickly, I mean, they did 3 billion in new deposits, which was, I think, more than anybody thought they were going to do. They had like 21.6 billion, but the lending business is going to be very, very profitable for SoFi. They just have to keep it to those super premium borrowers in terms of the personal loans. They have to be much, much more obviously selective with credit cards, student loans. They already get the best of the best. So you just have to expect that interest rates will eventually come down. Again, it looking like it might not be this year, but that's okay, guys. If you basically look at the growth curve of SoFi, and we'll get into this here. So they're saying 8 cents for this year. They're going to earn 8 cents a share this year. And then they're telling you, 55 to 80 cents in 2026. We don't know exactly what next year is going to be, but obviously it's going to be in this. So if you just use common sense and you say, okay, we just broke even, and by 2026, they're telling us could be up to 80 cents. The growth in SoFi in terms of the profit is about to explode. And why? Because the business model, this is why EBITDA is a useful metric for SoFi, because as they scale, a lot of these, fixed costs are just not going to grow because they don't have real estate, they don't have branches, they don't have all the employees and pensions and health insurance and different things that imply. In fact, they've just trimmed the headcount, they've just trimmed expenses as they're still having very very healthy membership growth. So I really, really like what SoFi is doing. I like the conservative nature of their management, but I need to see, just the macro is not lending itself to the cross-selling model right now. I think they're doing fairly well, but we're not seeing enough product growth, vis-a-vis the membership growth. So I need to see, and we're also just seeing tech revenues are just flat. Like SoFi management cleverly, lumps financial services and tech because it's not lending, which I understand. They're trying to emphasize that the other business segments are growing and, to make up for sort of them, dialing back on lending. But if you actually look at it, the revenue is growing in financial services. The revenue is not growing in tech, and financial services margins are not as rich as tech at the end of the day. So, when we're talking about that hybrid valuation that many of us think SoFi deserves and why we think the stock is so undervalued at these levels, we need to see the technology revenue grow. And we just haven't seen it. And management's telling us that it's happening, that it's the wheels are in motion, the check is in the mail, et cetera, et cetera. But, they don't want to take your word for it. So, don't tell me, show me, Anthony Noto. Don't tell me, show me. So show me that revenue growth. Show me, what they're doing out in Utah with our money, that SoFi shareholders coughed up, whatever it was, $1 billion some dollars for Galileo Financial Services. And further, show me the profits at the bottom line. I mean, I think they did really, really good job this quarter. Obviously, costs were controlled, but you want to see, as these revenues keep growing, you want to see more and more of that come to the bottom line. And EBITDA margins were very, very good. 25%, they're off from 30%. But people thought this Q1 was going to be a lot worse. A lot of people thought they weren't even going to, make money this quarter. So I think it was very, very good. But you guys tell me what you think. I've got Victor Ortiz with us. I believe Major Leaguer Victor Ortiz is here. It was Galileo's best growth in over a year. It was somewhat nice to see. Yeah, I mean, The membership growth was pretty good. I think what was it, 145 to 153. We'll take a look at it in a second. Calm down. Use second best customers. Yeah, the member that was very impressive. And guys, if you will look at this again, I should just start going through it. But Q1 is very very weak historically for member ads. So put in that context, this is really really good. Of course, Beach Boys here. Alberto Bertie Aviles, congratulations again on your wrench. You get absolutely nothing. Um, Blocking everyone. He's blocking everyone. He's taken over the whole channel. Oh my god, that was really up to 20. Exactly, charted travel. Exactly. They're just gonna hold it down until enough retail investors, capitulate and dump their shares around 7 or lower, whatever it is. So far, though, we've been very stubborn. I think retail has stopped dumping low. I think a lot of this stuff has stopped working. I think people took advantage today and accumulated these shares down in the low sevens. And, but the options premium obviously is very attractive on these calls. Market makers are sucking up options premium along with Credit Savage of Wall Street. Welcome and hello and welcome. Moderators in training club. Actually, yeah, man. Air Force. It's not we don't pay them that much. Institutions load at 7. Yep, you're absolutely right. Charted travel. No, yeah. Do not like and subscribe. Gilgo Beach Slayer. Gilgo. I said it correctly. Mark cares. What was his Noto today? He was guys. I have to be totally honest with you. I was on a red eye flight. I couldn't get live TV or anything, so I haven't slept. I haven't watched Noto. I have read. I've read the basics of the earnings call, but I just wanted to jump on. I'm going to go to sleep pretty soon for about 36 hours straight. Hibernate like a big hairy bear. But I think somebody called out the 4-3 puts on your engagement video on Friday. We'll see that. I will see this rocket once we sell. I'm in diamond hands. Yeah, I'm not selling, Alberto. Me neither. 60 man SoFi kicked us all in the nuts. Echo Doofus Rufus. No covered calls. $8 taking $1. 16 miles. PJ. My travel buddy. Let's see, 750 cash secured puts, selling them cash secured puts, Gilgo. Let's see, hope you had a nice one. It was great. I wish we were still in the islands. Bounce off 680. Was a buyer today. Wasn't planning on it. Yeah, I was a buyer today as well, Victor. Same with me. I called 12 in May. Yeah, I said 12 by the end of May. I don't know about that, buddy. Feels like a meme stock. It is a meme stock, but it was a meme stock, whatever you want to say. It was definitely very popular and a very popular retail, but Echo, the thing is, this is a real business. I mean, it's a real business. So it may have been a meme stock, but it just doesn't matter. They're going to make money. I mean, don't get your shine pop. No, I'm okay. I'm okay, man. My calls are out to like 2025 or most of them are like January 2026, but they're all like later. They're not none of these calls. It's not my money they're getting. I'll tell you that. I'm not that stupid. No offense. Mike Hill took to the wet cave and switched it up. Yeah, the wet cave was getting way too musty. Cookie Cave, Gilgo, idiots on Reddit are saying the stock is going to 4. I don't see it. I don't see where the FUD. How day? I hope you enjoyed yourself. So it's back 7 at the end. There you go. That's a nice swing. Everyone needs search eBay, SoFi. You'll buy more for sure. I'm a filthy and lowly turd. A lurker, the fireman. What's up, fireman? Lorraine, hello, and welcome, Lorraine. Matt Flo is here. Hello, Matt Flo. I'll be holding 3 to 5 years. Yeah, I just want to see, the thing is, if we can see them hit these numbers in 2026, they're talking about even, 55, 60 cents, I think that would be very, very good. If they can hit 80, I think it would be, extraordinary. Let's see what's going on here. Yeah, I could totally agree. Just totally incoherent, massive, people people are noticing that I'm just not really making a lot of sense, I guess. But it's afraid of the 50 days, small cap rotation, SoFi range bound. It's fine with me if it's range bound. I just don't want it to break down, much below that 7. I just don't see the tech part of SoFi. It's just, that's the question, Meech. No, I mean, it's exactly what I was talking about. I hadn't even seen your comment or anything. The tech growth has not been there. I mean, the counts are growing. It's good growth. It's solid growth, but revenue up 20% year on year is just not going to give anybody a stiffy who's a tech investor at this size, at this scope. It's small enough, that tech segment is small enough where when you want to see growth, you want to see explosive growth. You want to see that double, year on year, at least growing like 50% to give that rich valuation at that size, because it's such a small amount of revenue right now. So you're not going to get some huge valuation based on 20% growth on technology year on year. So, well, dark mode, that's sort of it's not really what they're working on, Meech. I mean, but yeah, your argument with the tech side is totally valid, and that's what I was talking about before too. What's up, Joy Luna? Good to see you. How's it going, Klaus? Good to see you. Don't hit the thumbs up. Absolutely, do not hit the thumbs up, or Alberto will come to your house and cook you a steak dinner. Welcome and hello. Welcome and hello. Lorraine, also thinking Noto needs to go and be replaced. Do look notes from Biden on the podium. Diamond Joe Biden. Yeah, to me, I really like Lapointe's presentation style more than I like Noto. I think Noto is far too canned when he goes on these TV hits. If you saw him with like Kathy Wood, where he was on for like an hour or something, and you see him a bit more in long form, doing Q&As and speeches that aren't necessarily televised, but they're recorded. You can find him online and stuff. He's much better. He's much better when he's not memorizing things, when it's not canned. So it is what it is. Bought at 706. Sergio, nicely bought. Earnings was stellar. They even got rid of all the moves they making, Cintrix, all those moves, the convertible note, getting rid of the high interest stuff. It was beautiful, and that's what they're talking about with this being a transitional quarter and this being a transitional year. They're transitioning, like I said, from me getting kicked in the nuts to me getting kicked in the nuts, but it is what it is. And like I said, guys, you have to look at what they're saying. They're saying this year is going to be, doing a bunch of stuff, hanging out around 8 or 10 cents profit, but then 2026, things absolutely explode. And I think you could see that in how EBITDA has increased, year on year, that when that goes to the bottom line, it's going to go. I wasn't going to buy anymore, but I had to. 200,000 shares coming soon. That is a hell of a goal. Noto's coiling the spring. He certainly is. I'm getting tired of shorting this BS manipulation. You may tire of it, but you don't matter, Leo Longevity, and neither do I. It matters when the market makers decide that's not how they're going to make the most money, and then they'll flip it. Noto has been coiling that spring since the dawn of time. Most retail is about to pop. He's got that thing. It's, what did he say in Ferris Bueller's Day Off? He shoved a lump of coal up his ass, so it would be a diamond. He's like, trust SoFi management. I do trust SoFi. And that's why I'm saying SoFi management's telling you they're going to make 55 to 80 cents EPS 2026. And people are like, oh, that's a pipe dream. I mean, why? They've delivered so far. I mean, that's an argument Tanner makes many times. Like, they're building a track record. Okay, if you think 1 year doesn't matter, 2 years doesn't matter, 3 years doesn't matter. If SoFi's management's delivering for 5 years as a public company, quarter on quarter, growth on growth, year on year, profit on profit, increase on increase, will the Gary Gordons of the world admit they were wrong? And if they can't, and if they fail, the rest of us will have to admit we're wrong. It's just the way it is. I mean, eventually the market is going to weigh this stock based on how much money they make. That's how the market weighs every stock eventually. I mean, some stocks are trading stocks, Tesla and different ones. They just take wild swings. But SoFi, for the bears who say, hey, it just trades like a bank, it certainly doesn't trade like a bank. Banks don't swing from $4 to $10 overnight, and then just fluctuate all over the place like this. These are traders. These are mechanics. These are shorts doing what they do. So just I wouldn't read too much into it. But guys, welcome and hello. Charted Travels here. Appreciate everybody. Anthony Noto's here. He's diamond handing. Eric Mordernell. Well, Noto should be so proud. I think he is very proud of what he's accomplished here at SoFi. As am I, Eric Mordernell. Thank you for checking in. The Mortadella salami. What is that? Is that stuff with the like olives and stuff? That like sliced galbas? Ugh. I hate that stuff. No offense to you, Eric. I'm sure you're wonderful at parties and on a nice Ritz cracker, maybe on a nice Triscuit. The mortadella. Let's see. More to love, mortadella. My doppelganger is here. Alberto got a real wrench. I hate shorts. What are the institution buys? I'll go back over that, Joy. We took a look at it. It's been increasing quite a bit. There's 415 million shares long at the last check on Fintel. These shorts got to go. White Feather's here. Welcome and hello, White Feather RC. Oprah's Camel Cookie. Klaus, we already said hello. The rest of you, Mike Hill, we said hello. Mike Hill, 780 end of decade, maybe, could be. It's and that's a point I was making, guys. Is that's funny that Mike Hill says that. Like, if you look at like Microsoft or something after the tech crash, 1999 or whatever, it was flat basically for the next 10 years. I kid you not. Microsoft. Same with Amazon. Those are two stocks that I owned that whole time. Or not that whole, not, it was different years, but those were the years for Microsoft. Amazon was later. But if you actually look at the charts, those stocks held almost the same level. And this is true of many other, these big tech stocks, they held the same level for approximately 10 years. Before just growing a ton. And I mean, I can show you that on any of these, but you can look it up yourself. I don't think that'll happen with SoFi. I think SoFi is going to start bringing a lot more money to the bottom line. Kareem is here. Welcome and hello, Kareem. Welcome and hello. Mike Hill is here. Mike Hill is not showering, I believe you. Let's see. Ghost. Mike Hill. You're a volume shooter like DeMarcus Cousins. You're just not funny. Stephen the Mountains. Hey Nala. Freddie Lafitte and his band with the beat. How's it going, Freddie? Stephen the Mountains is here. Kareem is here. Welcome and hello. Hello and welcome. Not a lurker now has new people following him. Un poco mas. Guys, let's go over some of these numbers. The rest of you turds can talk amongst yourselves. It's coffee talk. You'll talk. No big whoop. So member ads were very, very strong. This is what I was talking about here, guys. 622 million. Now, if you look historically at Q1, very, very low. You look at this, like Q1 2023, they added 433 million, and then the next quarter it was 584. So huge jump. And then, Q4 was down again, but then I think very few people, I think, were expecting them to add more members this quarter than they did last quarter. So that's really good to see. But then just same thing back to, Q1 2021 was very, very low. Q1 2022, huge drop from Q4 the previous. So Q4 2021 was 523 million, and then it dropped to 408. Q4 2022 was 480 million, then it dropped to 433. So Q4 585 and then increased to 622. We haven't seen that before. It's a very good sign. Products, this is where I think it's kind of weak. In the cross-selling, the loop is hard to engage in with, higher for longer that, has no end in sight. So a lot of the products people just aren't going to be going after. So you see, approximately, what is that, 700,000 new products to 600, 600, I'm sorry, that's in thousands. Yeah, so you see 700,000 products and 600,000 members. So, they're looking for that 1.5. It's not, it's not really, it's not what I want to see. I'd love to see more cross-selling. I know we all would. I know that's key to the business model. That's the two keys to the business model that I want to see, on an upward trajectory. I think that's why the stock's getting hammered. I don't think it's the weak sandbagging guidance. I think the stock's getting hammered. It was preordained, this 10% drop. But I think the stock could continue to struggle. If it does, the reason will be, they want to see proof. That proof is in the pudding. They want to see proof in that tech revenue, that tech growth. They want to see that increase in accounts, come through to the actual top line, at least, if not the bottom line. And I think they want to see some of these expenses shake out. What some of the bears were talking about, these uncategorized expenses. They're talking about each side of the business being net contribution positive, but a lot of these expenses should be attributed more specifically. So some of those are fair. Some of those are fair. Alberto's special. I'm special. Really, just JR is here. Welcome and hello. Welcome and hello, JR. Birdie has 2 wrenches. You got to ask him. One's in his pocket. One's he's just happy to see. I don't know. So Galileo counts were up nicely. This is a bigger number than we've seen year-over-year growth in terms of quarter-on-quarter. So 151 is the highest number we've ever seen, and this has been a nice steady march up over the last 4 quarters. So Q1 126, 129, 137. It started to accelerate a little bit. So that's pretty solid. Lending and financial services. Hello and welcome. Welcome and hello. I got to put this. I got to get out of this anyway. Let me quickly get out of this, and I'll get right back to you. So let me get through this data, and then I'll bail out of this and return that call and go to sleep. But so lending and financial services products. Lending products were up. Lending revenues were actually down. Financial services products were up very nicely. Financial services productivity loop. You guys can see all these numbers. Again, read through this deck. This is the pitch deck that comes out with earnings reports, available on, SoFi/investor relations or whatever. But they're talking about the total members in 2024 versus 2023. You could see 8.5 versus 11.8. So money is up nicely. Invest is up not too much. Credit card is up about 60,000 accounts. You can see the rest of these. It's just, it's across the board, which is good. Let's see, total financial services products, total lending products. So financial services products growing, vis-a-vis lending products, growing very, very well. So I think what they're trying to emphasize throughout this deck and throughout the ER call, again, I haven't had time to go back and listen to it yet, is that the other business segments outside of lending are growing. So adjusted net revenue fell from 594 to 581, but that's, I think, a lot better than a lot of people thought it was going to be, and that shows in guidance. 181 to 144. Non-GAAP results versus guidance, so they were at 581, low and high 550, 560, so variance to guidance, very, very solid. Adjusted EBITDA, they were looking 110 to 120. Hit 144, so again, that's very solid. They're just getting hammered on EBITDA margins. They're looking for 20%, hit 25%. That's critical. They're guiding for between 10 and 20. And this 88, this is a little bit deceptive because it was based on, it's just look at the numbers as you go forward. You'll see there was a one-time deal there. Adjusted net revenue, the low and the high, 555. Year-on-year growth, they're guiding for 15 to 17%. GAAP net income, Q2, they're guiding for 5 to 10 million again. But again, look at what they're guiding for here. Now they really they're saying around 22. What do you call it? Sorry, guys, haven't slept. The diluted earnings per share. So we expect to deliver 75% growth in financial service. Absolutely outstanding. Tech platform, 20%. Lending adjusted net revenue. That's healthy given where we're at and the risks at hand. GAAP net income, 165, 175. Adjusted EBITDA, 590 to 600. Diluted EPS, 8 to 9 cents. I think they're sandbagging there. 800 to a billion. Tangible book value growth. That's very, very important. Total capital ratio over 16% at year end. So, guys, I'm going to bail out of this thing. I'd highly recommend you go through the financial supplements. I'm going to go through all this in detail, but taking a look at 2024 guidance, they expect to deliver around 243 adjusted net revenue and 590, 600 in EBITDA. 165, 175 net income, 8 to 9 cents EPS. And again, just take this with a huge grain of salt. Annual growth 15 to 17%. I know that sounds really bad for a company that relies on the growth story, but look at the EBITDA margins. Just growth at the top line for growth's sake is really, pointless. It just looks good or might be good to pump the stock in the short term. But what you really want to see is that gap net income and that EPS increase. And management's telling you, they were guiding 7 to 8, now they're guiding 8 to 9, and they're telling you in 2026 this number would be 55 to 80 cents. And I think if it is, you have a stock that is extremely undervalued. If management is wrong or can't deliver, then you're going to see a stock that's going to languish, and until institutions come in and they flip this thing and get the shorts out of the way, the stock I think is going to continue, as folks have said, to be sort of range bound, that 750 area, and it's just going to move sideways. Be nice if less retarders bought short-term calls, but it is what it is. Guys, ER was pretty solid, but SoFi absolutely got hammered. Like I said, I think that was completely preloaded. I think it was completely pre-sold off. You look at just extremely flat volume, 150 million shares traded. This was just all algos working, all shorts, all mechanics, and they just took it down and churned the stock. I don't know how many people they stopped out. They only got it down to 7. Looks like it didn't break 7. I can probably expect it to break 7 tomorrow. But in any case, guys, I got to run. I got more important things to do. Just wanted to touch base with you all. Hope you guys are doing very, very well. And it is what it is, guys. It's just a tough day as a SoFi investor, but listen to Warren Buffett. Don't read too much into short-term price action. Keep your eye on the fundamentals. Sell those cover calls. Just do the smart things. Other guys are talking cash-secured puts. Just don't throw your money away on these short-term call options. They are a fool's errand. Anyway, guys, thank you for joining me on Un Poco Mas. It's Danny Deals. It's Hurricane Lopez. It's Stock Karen. It's Not a Lurker. It's J Money. For all of us, thank you for watching. We really appreciate it, and we'll talk to you guys again real soon. Peace! I'm out of here.